These are some of the frameworks that we have sort of been using on the ground since 2020. The very first one was landed property categorization. It's now known as category 1, 2, 3, and 4. Second one will be the disparity effect pricing. We introduced this during our landed convention this year. We call it the 4 horses DNA. And of course, later I'll talk a little bit about one rising trend in the market, which is the build-up framework as well. So, of course, landed homes has, in the past, I would say 4 years, especially after COVID, after a change in the preferences of buyers on the ground, it has really over the year anchored itself as a wealth preservation asset class among residential properties. In fact, when I started 17 years ago in real estate, buyers, our investors on the ground, they prefer condos more than landed. In fact, last time, I still remember my very first experience, my first year on the ground. I went with my mentor on at Seletar area, and I was just looking at, hey, why is it that this, the 4-bedder condo is at about 850,000. It was a 99-year condo. That was about 16 years back. But the corner terrace that is just right beside is only at about 1.1 million. The disparity was only 300,000 back then, and that time landed property has not risen in terms of popularity. And over the years, I think especially in the last 10 years, once all the cooling measures came out, people have started to recognize what we now call which kind of residential assets are softer, which are harder. And this has to do with, of course, the overall inventory in the market. So when we look at the choices of residential properties in the whole Singapore, although our land is very scarce, but of course we have 1.2 million HDB, is growing by about 20,000 units per annum. We have about 370,000 condo and apartments now, is growing at about 10,000 units per annum. GLS land sales comes in about 5,000 per half of the year, based on our government's observation of the supply and demand in the market. However, for landed property, it's only 73,000. It has maintained itself in the last 10 over years. The supply has not increased at all. There's no more new land. And when we look at the overall supply, it has been plateauing since, I would say, very flatly since about 2018. But before that, it was still hovering at about the same range of about probably 670,000, and now it has stabilized at about 73,000. Part of the reason why you see incremental increase is because of subdivision. That means when developers buy big land, they cut into 2 or 3 or 4 units. And then in PLB, basically what we allocate in terms of frameworks for our property buyers and investors, or even if our clients want to sell their homes and we help them to reinvest, we always look at quadrant 1 and 2. Quadrant 1 and 2, in a sense, landed homes are the hardest asset. It has the high growth characteristics, but of course, because of the high quantum, the rental yield is low. And of course, condos with high growth, high rental yield will be preferred. If not, we try to hunt for condos with at least high growth potential in terms of capital appreciation.